Starting your credit journey with a secured credit card is one of the most effective and reliable strategies in 2025. A secured card works just like a regular credit card, but instead of being approved based on your credit history, you put down a refundable cash deposit, usually between $200 and $500. That deposit becomes your credit limit. For example, if you put down $300, your limit will also be $300. This makes it less risky for the lender, since they have your deposit as collateral, and it allows people with no credit history to get approved more easily. The key to using a secured card properly is consistency. It's not about spending a lot, it's about proving you can borrow responsibly. The best approach is to use your card for small, manageable purchases that you would normally make anyway, such as groceries, gas, or a streaming subscription. Then, make sure to pay off the balance in full and on time every month. This not only prevents you from paying interest, but also demonstrates positive financial behavior to the credit bureaus. Over time, this activity gets reported to credit agencies, building your payment history and improving your score. Most importantly, after 6 to 12 months of responsible use, many banks will either return your deposit and upgrade you to an unsecured card, or you'll have enough history to apply for one on your own. This step sets the foundation for building long-term credit worthiness and opens the door to bigger opportunities like car loans and mortgages. Becoming an authorized user on someone else's credit card is another smart and low-risk way to start building credit when you don't yet have a history of your own. This strategy allows you to piggyback off the positive habits of a trusted family member or friend who already has good credit. When they add you as an authorized user, their account history, including on-time payments, length of credit, and low balances, gets reported to your credit file. This can quickly establish a positive track record for you, even if you don't actively use the card. In fact, you don't even need to receive a physical card or make purchases. The benefit comes simply from being linked to that well-managed account. However, choosing the right person is crucial. You should only become an authorized user on an account with a solid payment history, a low credit utilization ratio, and no late payments, because any negative habits on their part can also hurt your score. For example, if the primary account holder frequently maxes out their card or pays late, those negative marks could reflect on your report as well. When done correctly, this method can help you build credit faster than going it alone. It can also give you the benefit of a longer credit history, which makes up a significant portion of your credit score. In 2025, many banks and fintech platforms make it easy to add authorized users, making this one of the fastest ways to start your financial journey. Credit builder loans and fintech apps have become powerful tools in 2025 for people starting from zero credit. A credit builder loan works differently than a traditional loan. Instead of receiving the borrowed money upfront, the lender holds the funds in a secure account while you make small, fixed monthly payment, often between $25 and $50 for a set period, usually 6 to 12 months. Each payment is reported to the credit bureaus, helping you establish a positive payment history. At the end of the loan term, you receive the money you've paid in, minus any small fees or interest. This creates a win-win situation. You build credit while saving money at the same time. Alongside these loans, fintech apps have emerged as game changers for beginners. Apps like Chime, or Grow Credit offer credit-building options by reporting everyday payments, such as subscriptions or utility bills, directly to the credit bureaus. Some even provide virtual credit cards linked to your account, allowing you to build credit without taking on major financial risk. These modern solutions are designed to be affordable, accessible, and easy to manage, especially for young adults or immigrants who may struggle to qualify for traditional products. The key to success with credit builder loans and apps is consistency, making every payment on time and completing the program as planned. Within a year, many people see significant improvements in their scores, opening the door to more opportunities like secured credit cards, personal loans, or even auto financing. This method offers a steady, low-stress way to start building credit. Paying bills on time is one of the simplest yet most powerful ways to build credit, and in 2025, it has become easier than ever to make your everyday payments count. Your payment history makes up the largest portion of your credit score, about 35%, so consistently paying on time has a huge impact. Even if you don't have a credit card or traditional loan, services now exist to report your rent, utility bills, phone bills, and even streaming subscriptions directly to the major credit bureaus. Platforms like Experian Boost or rental reporting services can take payments you're already making and turn them into credit-building opportunities. For example, if you pay your $900 rent on time every month, that track record can now work in your favor. Missing payments, on the other hand, can be damaging, as late or skipped payments can stay on your report for years and make it harder to access credit in the future. That's why setting up automatic payments or reminders is essential to avoid slips. Another advantage of this approach is that it helps people with limited access to traditional credit start establishing a solid score based on their real financial habits. It's an easy, low-risk entry point because you're not taking on new debt, just proving reliability with the bills you already have. By making timeliness a priority, you not only strengthen your credit profile, but also show lenders that you're a dependable borrower, setting the stage for bigger financial opportunities later. Monitoring your credit regularly and keeping utilization low are crucial habits for building and maintaining good credit in 2025. Credit monitoring allows you to track your progress, catch errors, and protect yourself from identity theft, which is more common than ever in the digital age. Many free services and apps provide access to your credit score and reports, making it simple to stay informed. By checking monthly, you can see how your responsible actions, like paying on time or reducing balances, are impacting your score. Just as important is how you manage credit utilization, which refers to how much of your available credit you're using. For example, if you have a card with a $1,000 limit and carry a $300 balance, your utilization is 30%. Experts recommend keeping this ratio under 30%, but ideally closer to 10% for the best results. High utilization signals to lenders that you may be over-reliant on credit, which can hurt your score even if you always pay on time. A smart approach is to use your card for small purchases and pay them off in full before the due date or even multiple times throughout the month. This not only keeps your utilization low but also demonstrates strong financial discipline. Together, consistent monitoring and responsible usage help you stay on track and make informed decisions. Over time, these habits ensure your credit profile grows stronger, setting you up for approvals on bigger milestones like car loans, mortgages, or business credit lines.